So welcome back. This is I wanted to point this out because I'm back with Justin Holler at David Weekley Homes, built on your own lot. We're almost at a year. We're not quite there. We're at a year of us doing these videos. And today, I'm very excited because we're going to be talking about the housing market. I've done a lot of videos recently about the housing market, but today we're going to get a builder's perspective on this. Justin, thanks again for taking time to be with us today.
It's hard to believe it's been almost a year, right?
Almost. I mean, I'm kind of pushing it, but yeah, we're not out of the summer yet today.
That's right. Yeah, but we've been doing it, and we've enjoyed it. And for all of you out there that have been with us on this journey, we appreciate you. And for all the newcomers, welcome. We try to get in front of the cameras and talk shop a little bit every now and again, and kind of hit on a different aspect. We've talked about researching land when we're trying to build. We've gone through the whole investment process now, and I think we're trying to remain pretty relative with what's happening in the marketplace and what's happening out there in the world. And right now, from my perspective, and I know you're probably seeing this too, a lot of people have like that fear and hope. It's a fear of housing prices maybe dropping and then biting off, them building a home, and then all of a sudden the market falls.
Exactly.
Or, the hope that the interest rates will go back down to these historic lows that we've never seen before. And the whole time that they were waiting on that fear and that hope, one thing that's actually happening is that values are continuing to rise. Costs are always going to rise over time. There may be a short dip, but it's nothing that's going to be anything, catastrophic or create some sort of, you're not going to get that $1 million home for $200,000 right now, So I think it's good for people to kind of maybe be brought back to reality and hear some of the actual statistics of what's happened over the years. And, we can help kind of maybe alleviate some of that fear and help subside some of that hope, knowing that, if you want that interest rate, it's going to be out there eventually,
I've recently done a couple of videos regarding I call it the generational shift. Mm-hmm. In other words, if you look at historically, interest rates, inflation in say the 70s and 80s, a big driver of that was this massive group of people called the baby boomers entering their prime buying years. Well, we've got a very similar thing going on now with the millennials they tend to be better educated, have more income, and they're buying a lot of high ticket items, which if that is a guide, this current period that we're in may not be a quick fix. I mean, what if it's like a 10-year period where there's no relief to inflation? We don't know, but that's part of what we're talking about now, because we have just come out of something that has never happened before with the pandemic and the literal, for lack of a better word, craziness with regard to purchasing homes. That has driven prices up astronomically. I heard someone say it was like a 10 years worth of appreciation, like a year and a half kind of block.
Absolutely.
Now, areas like Austin has actually seen it even more. And I am beginning to see a lot of price reductions, not only from resale homes, but from your builders. I mean, I see builders reducing prices, offering concessions, because as a group, buyers have hit the brakes.
Absolutely.
and again, what we're talking about is we can't predict the future based on the past, but the past can give us some clues about what we might expect, because we have been through ups and downs in the economy, and over time, home values have gone up if you give it enough time. If someone is waiting for those interest rates to come down or waiting for the prices to continue to drop, and they wait too long, they could miss the opportunity that might. I personally believe there's an opportunity right now to be able to buy homes undervalued what they were just a short time ago. And the question is that what do you think that's going to be in, let's take it a little bit longer than 6 months, let's say 5 years. I think it's very unrealistic to think that the values are going to be down in the long term.
Noticing housing values steadily increase is kind of the way that things have always been. I think that we came out of this white hot environment where, I know for me personally, my house appreciated like crazy over the last few months.
On paper,
of course, yeah. I'm not selling it, so
Right.
it's not really capital gains as of yet.
Right.
But yeah, on paper, like you said. But costs have risen, and as costs rise, a lot of these homes have been purchased, and the values are there, so they're not going to just be coming down off the market. What you may notice is that homes are sitting on the market longer than 12 hours, which is
that's already happened. Yeah.
Yeah, you're going to notice that our inventory is going to rise up a little bit, and you're going to notice that things are going to kind of cool down. And I think that they're just not cooling down from a level of warmth. They're cooling down from a level of, like I said, white hot, back to normalcy. And I think we just need to all realize that. Texas A&M University has a great real estate analysis that is specifically dives into the home values since 1990 to today. And it's very clear to see that home values have consistently risen, even through the 4 recessions that we've had in that timeline, even though we're not technically in a recession yet. But they've still risen during all of those recessions. The only one they didn't was the housing crisis, or the financial crisis caused by the housing market, which was purely driven by this astronomical hike in an interest rate when you already own the home. And so now we've moved towards those more fixed rates. And we have a saying here, it's date the rate, marry the home. Your interest rate is a temporary deal. Most people you aren't locked into an interest rate for 30 years. It's called a 30-year fixed mortgage. If in 3 or 4 years the interest rates drop, guess what? You refinance. If they don't, you keep the rate as is and you kind of move on. So I think that from an investment standpoint, housing prices are not going to drop. There may be a slight break in the prices or a slight dip relative to what they were, but they will then snap back into place later on.
Well, I mean, here's kind of like the play the devil's advocate. Is true in Texas for the last big recession, the 2008. That is not the case in places like Las Vegas, California, Phoenix, Florida, where they saw, in some cases, double-digit reductions in home values. So maybe it's a plus. We now have people who live in this area with that kind of experience to know what it's like. That to assume that home values are always going to go up is not necessarily always the case in all markets. Now, add to that Austin has gone through this astronomical, unsustainable appreciation growth in a very short period of time. A lot of economists, myself included, feel that we're in that area of risk. Okay. I mean, if you see home values anywhere go up 70, 80, 90%, I saw that recently, is that Austin as a whole, 99% in 5 years, doubled in 5 years, okay? That kind of growth is nowhere close to sustainable. True. But because those prices have gone up so high, I mean, wouldn't you agree that there's an element of risk if things begin to slow?
A lot of that is cost-based increases. The price, I mean, I know for me specifically, I mean, we're not a demand-priced builder on building our lot. So it doesn't matter. What that means is it doesn't matter where I build. Within reason of my central location, I don't charge more to build in a hotter community or anything like that. It's the cost is the cost. So all the price increases that I noticed over the last couple of years were strictly a raw material cost increase.
Gotcha.
Labor cost increase. So when you have that, and you're not going to go backwards from that, because that means somebody that, especially with the way that we are now, and everyone's saying that people need more money, living wages and things like that. I mean, the overall cost to get people to a job has gone up, just the human factor, and they're not going to just turn around and willing to take these massive pay cuts. So the cost to build, the cost to produce a home has gone up quite a bit.
Gotcha.
So yes, what I am seeing though is where a majority of the concessions and things like that are being made is the land.
Correct.
So in my neighborhood, lots went up from $30,000 to $200,000 almost overnight. Now those pieces of land, there's nothing new about them. They're now starting to chip away at those costs. So if you have a lot that would have sold for $200,000 2 years ago, it's now in the market for $600,000. Yeah, it might go down to $400,000, but the cost to put a home there is not going to change. The cost for the builder to get those drywall guys out there is not going to change.
It's almost being like the antenna on the end of like a caterpillar, right? I mean, we're in a spot where and I bring this up in several videos, a lot of people, and I'm the same way. If I read a news story, that's not necessarily talk about what's happening today in the housing market, because of the delay in getting the sales data to be able to produce that story. So a lot of what we're discussing here with respect to what we've seen, it's a reflection of what's going on right now. Mm-hmm. And I think that kind of observation is a good thing.
Oh, yeah.
You know, because everybody thought it was a risk as those appraisals started going up for loans, because it happened in '08. If those appraisals are off, then all of a sudden somebody is upside down. They owe more than the house is worth.
Well, keep in mind, what happened in '08 was not this. What happened in '08 was that everybody's homes were foreclosed on.
Yeah.
And so I was in lending in Kansas City, and it was a perfect example of this. We had a neighborhood that we had that the builder literally did all the even numbers on the street, and then he was building all the odd numbers on the opposite side of the street. The even number streets had closed, the homes, people were living in them. He went belly up halfway through construction on the other side of the street. We foreclosed on him. Somebody came in and bought those, 50 cents on the dollar and finished them out and was able to sell them for, less than what the previous builder had to sell for. So that's what hurt the people on this side of the street, was that the whole, half the neighborhood went down in flames.
Yeah, gotcha.
We, David Weekley personally, and other builders are not sitting on months and months and months of new home inventory that we can't sell. Mm-hmm. We're closing out neighborhoods and starting new neighborhoods. I mean, what's interesting, so there was an absolute abundance of homes being constructed when interest rates spiked and people could no longer afford their home.
Right.
So then they went down. Right now, you're not seeing that. We're not in this that was when everybody was on a variable rate.
Just that initial.
Yeah, everybody was on those adjustable rates, and when those rates adjusted up from 5 to 7 or 8%, people couldn't afford their home anymore, and so they got foreclosed on, and that's what it was the financial crisis that created the housing crisis. Is kind of how that is, and this is just totally different.
All right. Well, thank you for clarifying that, and thank you for coming by today and taking time out. I hope, I know it's been beneficial to me. I hope it's been beneficial to you. So any final thoughts before we wrap it up?
I don't think so. It's always good to see you.
All right, well, good. If you have any questions, our contact information is in the description of this video. Don't hesitate to reach out, and until next time.